You have mid-cap and small-cap, which gains around 0.5% each. All sectoral indices in the green. IT and real estate recoup early losses. Auto and consumer durables emerges as the top gainer. Meanwhile, Polycab hits lower circuit after income tax department unaccounted cash sales of rupees 1,000 crores. All eyes on what lies ahead for the company now. TCS and Infosys to kick off the earnings season. Analysts expect muted revenue growth on the back of margin pressure and gloomy demand outlook. And it's an exclusive. Maruti Suzuki chairman R.C. Bhargav estimates 15 to 20% of total production from EV by 2031. And the first lot of EV cars will be exported.
Hello and welcome. This is Hot Money. I am Agam Vakil and with me is Hiral Dadia, where we are taking a look at the markets at the moment, which are quiet. We're not looking at too much traction with at least as far as the benchmarks are concerned. And, sure, we are looking at that Nifty weekly options expiry, but for now, an advance of around 0.25%, at least as far as the the Nifty goes. And it's the same for the Bank Nifty. Bank Nifty marginally in the green, and it is not looking at too much activity at the moment. However, let's take a look at the constituents of the Nifty and see where there is, in fact, a pull and push with respect to the index. So as far as the gainers go and what's really keeping and giving support to the markets, the index specifically is Reliance and Axis Bank to a certain extent, Bajaj Auto. TCS has turned into the green, and Infi on the other hand is also weighing down on the index. So you do have ICICI Bank, L&T, along with something like Dr. Reddy's, which is weighing down on the indices, but on the whole, marginally in the green as far as the benchmark goes. Let's talk about very quickly, what's happening with respect to the broader markets, mid-cap and small-cap indices outperforming the benchmarks to a certain extent, and that perhaps is going to be the highlight for the day so far, Hiral.
Absolutely. So that's with regards to where markets are concerned. But let's quickly shift focus in terms of the stocks we'll be discussing today. Polycab, you have Infosys and TCS that will be reporting numbers, Phoenix Mills and Senco Gold on their business updates. Let's welcome in our guest Avinash Goraksakar, Director of Research at Profit Mart Securities to talk more. Avinash, good afternoon and welcome to the show. Let's first pick up a Polycab. With what's happened with regards to Polycab, the stock has been seeing under pressure. Now, what can it do after the tax department has alleged 1,000 crore unaccounted sales number? Lots brewing there. What do you make out of it?
Yeah, good morning, Hiral. I think my guess is that whenever any corporate governance issue crops up for any company, the immediate knee-jerk reaction is that there is a huge bout of selling, and that is exactly what is happening in Polycab. Although the management has officially refuted the claims, whatever news flows we have got from various channels as well as news reports is that some 1,000 crores of unaccounted sales have been booked in the company's accounts. So I think now clearly the markets would like to wait for a clear management commentary post the Q3 numbers. And I think until that happens, the stock would be under pressure. The stock is heavily owned by some of the larger FIs, larger fund houses, PMSs. So I think unless a little more clarity comes in, it would be better to be a little cautious and stay away from the stock. The stock has already corrected by 20%, from its high. And I think if any clarity comes, then I think you could see a bounce back happening soon. Fundamentally, we still like the company. The business model is quite robust, but any underreporting or any kind of corporate governance is definitely not going to be liked by the market. So I think it's a hold from my side. But fresh buying, I think, should be done only when we get some clarity post the Q3 call, because that is one issue which the markets would be clearly looking at. And only then the stock will consolidate and then start moving upwards.
Right. I'm really curious if, a lot of investors would in fact take advantage of the situation and perhaps jump to something like a Havells or a KEI Industries and move out of Polycab. It's a wait and watch on that one. But let's talk about IT then. And big earnings coming in today. TCS along with Infosys. And we're expecting, a sequential decline as far as dollar revenues are concerned on account of high furloughs along with weakened demand. But I'm going to get in my colleague Tushar to take us through what we can expect from the quarterly earnings.
The bellwethers of Indian IT, TCS and Infosys, will declare the December quarter earnings today. While seasonality will be, of course, in play, the numbers may just be worse than expected. First up, let's take a look at TCS. A rare decline in revenue is likely due to furloughs, general slowdown in the IT sector, and lack of discretionary spending. There will be a positive impact of TCS BSNL deal, but how much of that will offset the pain remains to be seen. TCV is in focus. For that will show how demand will shape up in the rest of 2024. The EBIT margin will be flat because operational efficiency will be offset by furloughs. Now, coming to Infosys, it will be more of the same like in the lines of TCS. Again, flat to negative growth due to, again, furloughs, general slowdown, and lack of discretionary spending. Again, there's a large deal that Infosys stuck in the last quarter that was of Danske Bank. The ramp-up of that deal may offset some of the pain. The EBIT margin, however, for Infosys will decline due to absence of margin levers. Remember, Infosys gave out wage hikes in the third quarter. Now, what to watch out for? Infosys gives a guidance. So any cut or status quo should set the tone for the rest of the year. We have to also watch out for the reasons for the cancellation of the $1.5 billion AI deal and whether that impact will spill over into other deals. All in, TCS and Infosys will set the tone for the rest of the IT pack. There will be outliers for sure, but there's a pervading sense of a slowdown that's likely to persist for longer.
No doubt about the fact that TCS and Infi will set the tone for quarterly earnings coming in. But Avinash, let's talk about what we can expect beyond the third quarter. We know that it's a seasonally weak one. How are you assessing the stocks from a long-term perspective?
No, I think, Agam, my guess is that TCS is likely to show a sequential decline in its dollar revenue. More importantly, margins are going to be under watch. I think even if the company maintains its margins, the markets would be happy, but any decline would be considered to be a further negative for the stock. And more importantly, from the management commentary, one would like to know what are the kind of new client, which the company has bagged, what are the new orders. And typically in an election year, US is also going to be headed for elections. In an election year, typically we see that IT budgets get a little delayed. So my sense is that, maybe for the next 1 or 2 quarters, the going may not be all that great, not only for TCS, but even for Infosys. And I think management commentary in the last call, specifically Infosys, was quite negative. So I think you could expect a further, kind of negative, kind of fall in the price if the commentary is going to be cautious. Overall, I think margin pressure is going to be evident. And typically, I would say that the large caps would undermine the mid caps. I think we have been very positive on the smaller IT companies like Persistent, KPIT, where we believe, the management commentary has also been quite strong. So I think large caps would be a little, under strain. And I think the management commentary and the numbers today would clearly highlight all the points and facts and figures once, the con call details are out. But I think it's better to stay away from the large cap IT names, at least for some more time.
Certainly an important point being made there, considering it's election year in the US as well, which may perhaps delay deal signing as far as these IT giants are concerned. But on that note, we'll slip into a short break. But on the other side, we talk a lot more in terms of what's in store. Stay tuned in.
Welcome back. You're watching NDTV Profit. Now, Phoenix Mills, that's a stock to focus on as well in today's day of trade. Clearly, if you go to see, the stock has been trading under pressure, 4.5%. Cuts is what we are seeing in terms of where Phoenix Mills is concerned. If you quickly look at the numbers as well, the update that has come in, the gross collections are at around 700 crores, which is an uptick of around 30% coming in there. The total consumption has increased by 24% as well on a year-on-year basis. Now, clearly, the stock is not reflecting the kind of numbers that we're tracking, and that's what the street is not really happy about. But let's ask Avinash as to what his take is. Avinash, Phoenix Mills, absolutely not a pure play real estate player, a retail player as well. What would your view be, and what would you advise investors to do?
No, I think, Hiral, looking at the numbers, the profitability has jumped by almost 36%. And I think management commentary has also been quite encouraging. So my sense is, the stock has not outperformed the market. It has remained little low. Markets are yet, not realizing the full potential of the corporate going forward. So my sense is that one should definitely hold on. Investors who have a 12 to 18-month view can definitely look at buying on declines, considering the fact that its business model is quite scalable, it's pretty steady, cash flows are being generated in a pretty healthy manner. I would not be surprised that if you given a time period of say 12 to 18 months, this could be a strong outperformer. I think numbers are definitely much better than the street estimates, but the street has not given it a kind of a premium rating. Mostly markets would probably wait for another quarter to get some confirmation. But after that, I think the markets would definitely look at the potential, cash flow generating capacity of this company, which seems quite promising. So it's a hold, and any decline could definitely be addition to one's portfolio.
Okay, so that's your view on Phoenix Mills. Of course, well, the stock has been under a tad bit of pressure today. But, if you leave that out aside, it's had a tremendous run through the course of the last 1 year. But from there on, we move on to Senco Gold. And this is the other one which came up with this quarterly update. From what we understand is that it looks like a reasonably good update. And, it's been rewarded as far as the investors and traders go. It's up and advancing. What we also get is that they are looking at well over 24% revenue growth in the quarter gone by. And, they are looking at showrooms which have expanded to 155, of which 19 showrooms have been added in the last 9 odd months. And the strategic focus, of course, we know is east and northern markets. And it's something that has been playing in favor of the company and with good effect as well. Avinash, how would you rate Senco Gold? I know it's one of the relatively smaller jewelry retailers, but is there opportunity here? And what is your overall view on this one?
No, I think Agam, Senco Gold should report reasonably good numbers. In fact, the entire jewelry space, if you ask me, has done remarkably well. If you look at Titan, you look at Kalyan Jewelers, I think the jewelry space is growing quite strongly. A lot of unorganized demand is getting shifted to the organized players. And I think Senco Gold, definitely looking at the kind of geographical reach which it has got in Eastern India, plus the kind of new footprint it plans to add, would definitely go a long way. So I think, despite the fact that the stock has moved up sharply ever since the IPO, I would believe that, the fair value could be anywhere between 900 to 950 rupees. And I think if you were to look at the longer term perspective, I think the jewelry market in India is expected to grow in double digits. And clearly, Senco has always outperformed the industry growth. So my sense is, yes, it's a hold. But any decline or any kind of correction, if it does come, should be used as an opportunity to add in your portfolio. We are positive on the jewelry sector for the next 12 to 18 months.
That's with regards to where Senco is concerned. In fact, with this, let's just quickly pull up a TBZ as well. That stock is seeing some smart gains. Kalyan Jewelers, Titan, a few of the other names that one should be watching out for as well. And you have a Moti Sons, which is a recent listing, and a Sky Gold. So good traction coming in with regards to where gold companies are concerned overall. But shifting focus to the PSU banking space, you have a Bank of India that did report its business update. Now, the domestic deposits have seen a growth of around 7.6%. 6%. Advances have grown almost 11.5% as well. Now, with regards to Bank of India, if you go to see or the PSU banking space, the moves are slightly tepid right now. There is some bit of profit booking that is coming in that space. The stock right now is up 2.4%. Avinash, how would you look at a Bank of India and any other top picks from the PSU banking space?
No, I think Hiral, the only negative or maybe the near-term concern for Bank of India is the deposit growth, because going forward, my sense is there's going to be a war for deposits, and banks are definitely now going to find it very challenging to raise their deposit growth, considering the kind of competition within the PSU banks as well as the private sector banks. I think in terms of the bigger banks, something like a SBI, a Bank of Baroda, our sense is that these banks with a large CASA ratio could do significantly better than smaller banks, and that is where possibly the deposit growth benefit could come into these bigger players. So we are positive on SBI. We believe that any dip or even at the current level, SBI can provide a decent risk reward if somebody has a 12 to 18 month view. With the kind of corporate capex going on and plus the infra, kind of push by the government, I would not be surprised that State Bank of India looks pretty attractive. I mean, though in the near term there could be challenges on the net interest margins, but I think clearly a price of 720, 750 over the next, say, 12, 18 months looks possible. So I think SBI is our top pick from the PSU bank.
SBI remains the top pick and the valuations are also absolutely reasonable. Thank you, Avinash, so much for joining us on the show and getting us the views. We are, in fact, completely out of time on this edition of Hot Money. It's a thank you from Agam and myself. And do stay tuned. Lots more lined up on NDTV Profit.